Reyes, Osvaldo Gomez Martinez, and the other partners for really inviting an exceptional group of panelists who can discuss with us private sector initiatives to use new products, processes, and technology to design new and innovative, commercially viable products to expand financial inclusion in Latin America and the Caribbean among the unbanked and the poor and the working poor. I'll start by mentioning that in 2011, the World Bank, in collaboration with the Bill and Melinda Gates Foundation and Gallup, undertook a large data collection effort to collect data, ask people around the world how they save, borrow, make payments, and manage risk. This database, which was published in 2012, the Global Financial Inclusion, or FINDEX database, showed, as was previously mentioned, that 2.5 billion adults around the world are currently unbanked, including 61% of adults in Latin America. I'll also mention, in light of this morning's conversation, that I heard the cries of the Caribbean, and will be, in addition to covering every country in Latin America, we're updating the database in 2014, and we'll be hopefully expanding our coverage of the Caribbean from 2 countries to 6, which we're very excited to have that additional information on additional metrics of financial inclusion in the Caribbean. The data also showed a persistent 9% gender gap between the use of formal financial services between men and women in the region. And this is both across various income groups, as well as within country, even among the 20% of richest earners in the country, we still see this persistent gender gap. Moreover, less than half of adults that have accounts in Latin America and the Caribbean use their accounts for formal savings or formal payments. The majority simply withdraw the full amount on payday or on the day that they receive a government transfer or remittances from family living elsewhere. The FINDEX survey also asks the unbanked why they don't have an account. Importantly, about 20% of the unbanked in Latin America and the Caribbean cite distance to the bank or missing documentation as reasons for not having an account. Although notably and importantly, 40% of unbanked adults in Latin America and the Caribbean cite the cost of opening and maintaining an account. This compares to only 25% of the unbanked on average across all developing economies. In other words, consistent with other data we have from regulators in the private sector, the unbanked report the cost of that banking in Latin America and the Caribbean is expensive. At the same time, we see the potential for new and old technology to drive down the costs and increase access to financial services. This can include mobile money agents, mobile banking products, as well as more traditional bank agents, payment cards, and increasing number of point of sales. So I'd like to open the discussion by asking each of the panelists to discuss a specific product that they offer to provide more affordable and accessible financial services to the poor, to the unbanked in Latin America and the Caribbean, which will highlight the role of electronic digital payments, the role of insurance, the role of credit, as on-ramps to financial inclusion among the unbanked. After these short presentations, and instead of using Peruvian time, I will use my husband's Swiss time to enforce short presentations, about 5 minutes. I really would like to open it to the floor to hear your questions to this exceptional panel of speakers. So I'd like to start off with Eduardo Coello, the Senior Vice President for Latin America and the Caribbean at Visa.
Well, Leora, thanks. Thank you very much for the invitation. Thanks to everybody to be here to discuss this important matter. And I would like to start making you some questions. For instance, where do you keep your debit or credit card? Maybe most of you will answer that you have it maybe in your wallet or maybe inside a drawer. Well, that is not true for most of the people. That is not included in the financial system. Even if they have a card receiving some benefits on it, most of the time that people keeps the card inside a plastic bag, and most of the times I've seen it inside the washer machine because they feel like that is the safest place at home, and that's the way they can still keep the card. If I ask you if you can buy groceries paying with your card, you will say, yeah, most of the time the place that I buy is a place where I can pay with my card. where for most of the people that are receiving maybe the remittances or these social support programs, they can't pay directly with a card. If I also ask you if you need to lend money and what will the cost be, most of you will tell me, well, maybe I can borrow money for 1%, 2%, 3% per month. Most of the people in Latin America, the only option they have to lend money or to borrow money is to get it at a 10% per week. So that is basically what the financial system is, but that is the informal financial system. In Visa, financial inclusion means how can we bring all of these people to the formal financial system, a place where I can save the money in an account that is most of the time protected by my government, not under the mattress where someone can steal that money. And if I need to borrow money, I can get it to a reasonable cost, not being 10% per week. We have started this journey from several years ago to include financially all of this population in Latin America and in other parts of the world. And some of the experiences we have had and the learnings is that this is a huge journey. This is it demands a lot of collaboration inside a company. We do business basically through financial institutions and through merchants. But we have learned that we need to bring more participants into these efforts. So we are including also the governments. We are having different programs where we distribute money in cards. But we also close the loop, integrating the small merchants that can accept the product. One of the most successful programs is one that is getting already to 10 years, which is a Solidaridad program in Dominican Republic, where we all know the kind of monies that they are distributed there. But I also want to share with you that 80% of the small merchants that originally started to distribute the program, meaning accepting the card to sell the goods, are still live. In a small merchant community, where where you see the turnaround index is very high, it's very interesting to see that actually the program can also make this small store to survive because they are adding more value to the small community, creating more economy around that small store in that economy. So when we work with the governments, we also see the fact that a transaction done with a card, an electronic transaction, has a higher probability to pay taxes. One of the main challenges that our governments have is how can we have a more efficient tax collection and fighting against the informal and the shadow economy. Electronic payments bring that benefit to the economies. So the governments also see the benefit not only of reducing the cost of distributing these programs, but also the benefit of increasing the efficiency of the tax collection part. And also we have been able to bring more industries into this effort to electronify the commerce, like the case in Mexico, where we are also having a large consumer product goods company that is also investing in the traditional channel to make those small stores to survive. So financial inclusion is not only a person having a card where they would receive the money, is having a banking relationship where people can initially have some savings, then to create some credit history, but also in the small merchant side, you are also including financially these small stores that will create and will help to create more development around their areas.
Thank you. Thank you for staying on time. I'd actually like to next invite Alberto Sanchez, Chief Executive Officer and President at Santander Investment Securities.
Well, thank you. Thank you for inviting Santander to this panel, and thank you for inviting me. Thank you. In the case of Santander, as you probably know, we are present in the Latin American and the Caribbean for several decades now. Actually, the bank opened the the branch in Cuba, in La Habana, in the 1950s before they opened a branch in Barcelona, which shows, you know, that the tradition of the bank with the Caribbean and Latin America has always been very strong. Since then, the bank has evolved into becoming a major player in the region, especially in the big markets. But a little bit of what Mr. Coello was saying is happening also in the banking industry, which is technology is making it incredibly challenging to maintain the old banking system. We have to consider that the evolution, the amount of data that you can gather today from clients, from customers, etc., if used in a right way, in a positive way, can derive in enormous benefits. Today, data is very cheap to store, is very cheap to obtain. It's not so cheap to analyze. You know, you need, you know, some brain power and PhDs and quants and all that to analyze it, but clearly it gives you a lot more information than we ever had before. The more information you make as a bank, the better you make the decisions about lending money or borrowing money from others, and the more efficient you become. When banks have uncertainty, since we usually were not charity institutions, we try to make money. Sometimes we fail, but other times we succeed. But when there is uncertainty, you charge more with the just-in-case policy of, just in case there is something I don't understand, I'm going to charge more for this interest, I'm going to charge more for this loan, because there's things that I don't understand. The more information you get, the more accurate you can become, and the lower you can lower your rate, because you can become more efficient at doing it. And that is happening in all the products. I will mention two examples. One is when we started with direct debit in Argentina. We told the Argentine government, that was in 15 years ago, when we told them, you know, direct debit has an enormous advantage. Obviously, if the banking system gets the proceeds of the payrolls and wages of people, you as the government, as, you know, tax collector, will see that coming in. It's much more transparent, instead of having people with envelopes of cash at the end of a month being paid, etc., here and there. And, you know, everybody agreed that that is the way to go in a financial system where people, you know, the transactions happen more in the banking system, where there's more transparency, there's more control, less problems of anti-money laundering, etc. What we found was the male Argentines were mainly against it. And what we discovered was that they were not telling their wives how much money they were making. So sometimes they were, you know, collecting the envelope, keeping apart from them, and then handing the envelope at home. So we discovered that it's not only the technology and all that, but it's also the social issues and barriers. When you realize, when you are making a big change, that there's resistance to the change, and you have to understand the causes and the roots of it. We had the same issue in other countries. Nothing against the Argentine males. You know that I think we're all a bit the same in that respect. So we found the same issues in other countries, but at the end, the country and the society as a whole favor that change, and that has been the change. The other example I want to give you is a product that Santander is world leader, and many of you probably don't know, which is car financing. Or automobile financing. We are the largest financer of automobiles in the world. We finance about 4 million cars a year. Many of them, half of them are actually used. We think that it is one of the biggest empowerment you can give to anybody in their lives is when they have mobility and they have a car. For us as a bank, it's a product that we understand. It has a lot of advantages to do it in many countries. First of all, they'll have 4 wheels and an engine. And second thing, they all depreciate. There's no, like in the real estate market, when you know you have to make bets if real estate is going to go up or it's going to go down on the stock market or commodities, etc. A car is a lot simpler. It always goes down in price. You know, the moment you go out of the car dealer, it always goes down. So it makes it a lot easier as a financial product. But we also, what we have seen is that working with importers, working with manufacturers, we are able to provide a very competitive product. We are able to provide car financing to people that were never thinking even of being able to finance and to own a car. Sometimes it's a used car, but once they get a good track record and a good credit history, they move into a new car, And that, I think, that is a product that we have developed a lot. It requires a lot of data analysis, scoring models, credit bureaus, etc. It requires a lot of analysis of each of the individual markets, but I think that's part of the technology revolution that we're all living in.
Thank you. If I could ask a follow-up question. So actually, in addition to being less able to hide money from your wife, another advantage potentially of direct payments is that the money goes directly to the wife. In the flip case, that instead of coming home with a wad of cash, which other members of the family may access themselves to, government payments or wages are made directly to the woman. The second issue facing women in Latin America and the Caribbean and elsewhere is lack of as extensive a credit history potentially as men have. So I guess bringing this together, my question is, do you use the payment history information that you collect as part of these direct payments or any other alternative sources of information to credit score the cars and potentially women in particular?
We do. In order to avoid discrimination, we try to avoid knowing if it's a man or a woman, or race or gender, or any. And we try to make the machine analyze it. What we've learned, and this is not very good news for humans, is that the machine usually does it better. When you have manual intervention, you always screw up. When you put the set of rules and you let the machine score everybody blindly, they do a much better job when you think, oh, I know better, I know this client for many years, he's going to pay better, etc. When our experience is that, especially in consumer credit, where there is millions and millions of decisions being made, again, unfortunately for humans, the machines do a much better job, and we can test that. So in that case, if females or women have a credit history, of course it's taken into consideration. Mostly in Latin America, it's men who ask for the credit for the car, but we don't ask any of that information because we don't want to discriminate, or we don't want to prejudge the credit. The credit is just based on objective data.
Thank you. Next, Robert Annibale, the Global Director for Community Development and Microfinance at CITIBANK.
Well, first, thank you for having us, inviting us as well, and what a welcome. I recognize so many countries where we have a presence, that from the Mexicans and Brazils to the Barbadoses to the Bahamas and elsewhere, there's somewhere a CITIBANK in many of the countries that we operate here in. But I'll draw on a wider experience, our own plus a little bit more from my time. I don't know if we had anybody here from CGAP at the World Bank before, earlier on, the consultative group to assist the poor that works a lot in microfinance and financial inclusion, and I have been serving on their board for some time as well. And there is the challenges of scale. One of the issues that come up, I think, very often when people like myself who work in microfinance or who look at reaching larger numbers in theory of lower income communities, has always been one that the models that are often put forward are based on scale. On that, you can make this work if you can have large numbers. And that may well be the case in countries like Mexico or Brazil or elsewhere, but for many other countries, and not just in this region, but ones we work in like Jordan versus Egypt. You have that look at different models for countries of a different size. I think when we think about the challenges and the issues of financial inclusion, we need to have multiple tools and models to get there. We've had perhaps watched and been involved in places such as Haiti, where we have a presence for a long time, or the Dominican Republic, or of course, the Argentinas and the Colombias and Guatemalas and the whole range. But I was thinking more about some of the islands that are here too, and the countries where the challenges are different. So what some of the earlier speakers brought up raised some of the ideas that I think should be discussed. One is the use of mobile and mobile platforms. They are already established. They already are pretty ubiquitous. People of almost all income have in a household an access to a mobile phone. And almost everywhere you go in the world, and it's quite amazing. Sometimes there's multiple family members have it. It becomes in many ways the platform that may not exist in terms of bricks and mortar, in terms of branches everywhere around the country, or in terms of, for example, making payments. One of the things we looked at, and again, I'm just thinking off my head, the Dominican Republic, because of a group called AutoPem. AutoPem is a microfinance organization, and it really serves small businesses and very low-income communities, members. But for very small businesses, mom and pop shops, small, greengrocers up country, for them to pay their suppliers, and when they buy from the city, from the capital, deliveries come to them, they're paying cash. They're always paying cash. And cash is expensive. It's expensive to have to hold. It's expensive to be paying a truck driver, and risky to deliver Coca-Cola or deliver the goods or whatever you're buying. And what we have found was that with the larger banks and some of our people like ourselves, is we maybe have relationships with some of those larger distributors, but not the small business. But then there are organizations that do. And groups like AutoPem do. Microfinance institutions do. Sometimes the cooperatives could be a very important partner that reach into rural areas for those who are producers. How do you link them to some of the larger buyers or producers? And we're doing that in the case of the Dominican Republic by partnering with an institution like AutoPem. So we use a mobile platform called Tobago, and it's in Citi's own payment system too. So you realize that it takes multiple players sometimes to create this continuum of financial services that can get into rural areas or smaller producers or smaller shopkeepers. And yet, how do you tap into that platform that's really been designed in many ways for larger resources? And I think that the payment platform is going to be very important. The concept that I think was brought up through Visa and others about using the cards is a tool for that. As long as you have enough places in the country, in the rural areas, with points of sale where you can use the cards or take cash out, that's key. But for us, the experience, whether in LATAM, Latin America, and the Caribbean, or in Asia, when you get to rural areas and more sparse populations too, has been really important to think of other partners that financial institutions can work with. I think a lot about cooperatives, because I think you all have a history of cooperatives in your markets, usually for commodity production and purchasing. Many of them have a history of problems as well, but a lot of countries have really restructured and strengthened the governance over that sector, but they have outreach. The other is, how do you use other third-party retailers, like the small shops and others, to be the cash point, where you can, as individuals, pay for something that you're going to make, whether it's a tax payment or it's a payment for your mobile, just like where you go for your mobile to pay for the airtime. They have become very important agents in other countries for where you could receive your remittance money. If the money is sent and advised on the mobile, you can receive it on the mobile. We use that in countries like Kenya, where we have only 2 branches, one in the capital and one in Mombasa, far away from most of the population out of the city. But using the mobile platform in that country, we can make payments to people anywhere, or our clients can. And I think the integration of realizing who else handles cash other than the banks, and partnering with them and the banks can really expand outreach much faster than just trying to build more bricks and mortar branches in the countryside. So that's sort of one of the approaches we've had in some places like Dominican Republic. We're looking at Haiti, or in other countries that are similar environments.
Well, thank you. I guess the question I have, certainly when working with these informal firms, there must be a fear of formalizing their payments, be it from the cash authority or other formal institutions. How do you address in discussions with these small suppliers, how do you incentivize them to join the digital platform?
I mean, I think what's important is those who have the relationship with the smallest shopkeepers and businesses or producers in agriculture need to be the ones who have that relationship and make the case. Because it's not going to be, if they fear that there's going to be a tax consequence or a regulator is going to suddenly descend on them because now they've kind of come above the radar, they're not going to participate. But that's why I think that one really has to look at what other groups you have that have economic activity with the more underserved communities by financial services, because they are really I think they're the strong partner to get you there. And plus, from all of us, from a legal, compliance, regulatory perspective, it's not easy to work with the informal sector. So you do need to work with institutions who themselves have those relationships, who have a history with those individuals or those small businesses.
No, thank you. It's just mentioned going forward, it'll be interesting also to see, I'm doing some work in Indonesia, where over half the small retailers we surveyed said they have no accounting, it's in their head. And so just the fact that there's now a digital record, how this can help the retailers themselves also in the terms of their purchases and on-time payments, there are clearly additional spillovers to the real performance as well.
And if I might, having a POS terminal or something in your store allows you to sell digital goods, like airtime or receiving bill payments, and that's a new revenue source for you. So as a store, you also want to be part of that that distribution channel.
Absolutely, thank you. And so finally, certainly managing the everyday risks is of the highest priority to the poor, be it fire or theft or death of a family member. And so delighted to ask Fabricio Campos, the Regional Vice President for Latin America, the Caribbean, Small and Medium-Sized Enterprises at AIG.
Okay. Yeah. I'm Fabricio Campos. I work for AIG in Latin America, and AIG has been in Latin America for many years. What was very interesting to hear from my colleagues in the bank sector is that we face the same challenges, the challenge of scale, the challenge to access the population, and also the challenge of educating this population. So what I would like to share with you is some of examples of financial inclusion in which microinsurance helped to alleviate the poverty cycle. Because when we are talking about financial inclusion, first thing come to mind is access to cash, access to means of trade, or even savings, or a credit. But we cannot forget about the risks. One example that I can bring to mind, if we talk about grocery store in the rural areas, right? So this woman has this grocery store and get a $2,000 loan to be able to, stock up, paint her store, and build an income out of it. And then a flood comes, and there's a heavy rain. And then now this woman not only do not have the income source, but also has a debt to pay. So another example in the same event, we could have flood, and then 400 houses go, and now they are also in financial difficulty. Those two examples, we have cases in which, through microcredit organizations, we included a comprehensive insurance in which that lady had insurance and was able to recover that the loss and continue to pay for the credit and continue to generate the income necessary. And on a separate scheme that we have, with the same event, this scheme distributed through utility companies. All those families also had insurance and were able to actually recover from their losses. Another example that's unrelated is a mother, a young mother with 2 kids, and her husband died. And because she was part of one of our programs that we work, she had access to life insurance and funeral costs, which helped her through this very difficult time. Those 3 programs, and then go really back to what you, my colleagues said, rely a lot on partnership. None of them could be done by us alone or any individual partner alone. One is a microcredit company with very strong network that really is the one serving this population, and also helping us to spread the risk, which is something that you mentioned, Eduardo. That's very important for us to be able to spread the risk, understand, get information, to be able to have a price that is affordable. Another, as I mentioned, are utility companies that allowed us to go and face-to-face provide this service, the insurance service. But they pay the insurance through the utility bill. So in other words, So most of those low-income families don't have bank accounts or even access to the banking, but they're now having access to insurance coverage. And the third example is a very interesting one, which is basically mandatory coverage, but a sort of a price for certain behavior. This young woman was part of a financial education program in which we were trying to promote women to save. So if they saved and proved that they saved during a certain period, the life insurance would be free for them on the first year. In the second year, they would have to purchase the microinsurance. But the education was there, and the need was already understood, and we are actually in this specific program, which is very focused to women, we are actually having a renewal ratio of 75%. I mean, in other words, those women actually now are purchasing the insurance, and which I believe without this complete view, including education and support, those renewals would be below 10%. So one other point that is bear in mind is when we are talking about those insurance, we are talking about insurance that costs less than $3 per month. So it's really very, very important to have the right partners, because the distribution costs can make it uneconomical, and we have also to make sure the products are meaningful, to work as the safety net that I mentioned to stop the poverty cycle, but affordable. And that's why it's our responsibility as partners to find the best way to reach this population.
Yeah, thank you. I'll follow up with you first, since the insurance industry is so regulated. You have the ears of regulators from throughout the region. Is there one example of a regulatory barrier or a feature of an enabling environment that's important to your market?
I do believe that microinsurance is now really, even though it's been talked for a long time, is still in inception. It's right. It's a very new industry, and it's becoming an industry, right? And probably microinsurance is where microcredit was like 20 years ago. So in terms of regulation, what we need to be careful is not to over-regulate a new industry before the industry is stabilized. So for example, if the regulation of insurance is mostly focused on higher income or commercial clients and require enormous amount of information many times, in which the insurance companies needs to collect, maintain, and retain. Another point that regulatory sometimes ask is detailed information about the risk, so we can build the reserves and so on and so forth. When you go to microinsurance, as Roberto mentioned, many of these people do not have a proper documentation of their houses. Many of those people are not living in the formal economy. So we need to make sure when we build those regulations, we adapt it to protect these people, not to prevent them from accessing this insurance.
Would any other panelists?
Well, governments can do a lot to accelerate the electronic payment adoption in the population. We have some examples in Latin America where you are starting to receive a tax rebate from your value-added tax at the end of the month, with all your payments done with a debit card. So that it's a right incentive for the consumer to look for the store that is already in the formal economy, pay with the card, receive the rebate, and that motivates the rest of the stores to ask for a POS terminal. So that is one of the main actions that we have seen in some countries that really accelerates the pace.
I'd like to now open up the floor to any questions. Thank you. In the first row. Oh, I'm sorry. Oh.
Thank you, Brenda Hood from Grenada. I have a comment and two questions. The first comment is that one of the presenters mentioned that they do give a lot of financing for the purchase of vehicles. Where I come from, that is important, but for most of families, the important thing is that support will be given to, in particular, the young people to purchase a home or to have a piece of land, because that is critical to help them down the road. Because as you indicated, if you purchase a vehicle, it depreciates, it doesn't appreciate. Whereas if you have a house or you have land, it always appreciates. So this is what happens in my part in Grenada. I mean, young people want to have a car, but as parents and, we try to say to them, if you go out there and you purchase a car, the chances are you may end up in an accident and you would lose everything. Whereas if you have a piece of land or you put some money towards getting a loan to build a house, you may be better off down the road. The other question I have is the fact that I find that over the years, with the problems that we are facing with the economy and all of that, many of the banking institutions in the Caribbean, the interest rate that they give you or they ask you to pay is extremely high. However, in North America, when I look at the news and I see what is happening, you can get a mortgage, you can get a loan for as low as 3%. But this never happens in the Caribbean, in Grenada, that I'm sure in the other Caribbean island. And some of these banks in the region do have banks in North America. So why is this happening, and why is it that structures are not put in place to reduce the interest rates in the Caribbean?
Thank you. Let's take two or three questions, and then panelists are welcome to just answer.
Solo aportar algo. Voy a hablar en español. If you don't mind. My English is not good. Aportando a la exponencia de Eduardo, un poco República Dominicana puede ser un buen ejemplo para otros países en términos de articulación estratégica entre el gobierno y el sector privado para expansión de cobertura en protección social. La disponibilidad tecnológica que Visa pudo, digamos, tener al servicio del gobierno pudo hacer posible desde el 2004, cuando inicia un programa social, Solidaridad, se servían 17,000 hogares solamente. Ya al tercer año, con la articulación a través de la banca formal y Visa como plataforma intermedia, pudimos acceder y expandir a 190,000 familias. Hoy día, en el 2014, estamos hablando de 860,000 familias que transan a través de Verifone con tarjetas de débito prepagadas. Es un poco un ejemplo que puede ser replicable a otros países y digamos que la proactividad en términos de buscar las opciones disponibles puede empezar aquí en un seminario de este tipo.
Thank you. One more in the back, please. Thank you.
This concept, Anthony Santiago, National League of Cities, this concept of micro insurance as a tool in the financial inclusion space was actually something I was having a conversation early at the beginning of this conference, and I would like to explore. So I'm curious, because I've seen a lot of programs nationally that don't address this, and I think there's high value in providing protection for what assets people do have in the low income, including the low income communities, and many folks don't have jobs that provide insurance, like life insurance. So I'm curious from the panel if you're aware of any initiatives here in the States that pick up this component in the financial inclusion work.
Who would like to reply first?
On the part of the auto finance that you mentioned, we don't tell people which loan to take. You know, we're not personal advisors. You should buy a house and not buy a car, or whatever. You know, as a financial institution, you know, these are the loans we offer. We offer you a personal loan, a loan to buy a car, a loan to buy a house. Each individual makes their own decision. I mean, they have to see the risk. They have to understand what they're getting into. We offer mortgages too. So you want to buy a house, this is the offer, etc. But we're not going to tell you you have to buy this house, be closer to the beach, so the real estate is going to appreciate, etc. What we know for sure is that real estate is more risky than auto finance. The reason being is that real estate goes up and down. So even if maybe your experience is that it always goes up, some countries that thought that, now my home country was one of them, was Spain, they realized that things that go up also go down. So in the case of the auto finance, my point was made that as a financial product, it's easier to price it because it always goes down. That is going to make a bank or a finance company more likely to price it better and with less risk, and therefore lower for people that want to have that loan. In the particular case of why interest rates are so high in the Caribbean versus other bigger markets, I think it's two issues. One is risk. You have to understand the risk or not, and two is competition. If there's not much competition, there's an oligopoly of a few banks that basically are competing in that market and pushes the price up. Like with any other product, money is not different, or lending money is not different to many other commodities or many other products. If you have a lot of competition and the risk is understood, the prices go down. There's no doubt about it. In the US, there is 7,000 banks. So if you want to be very smart and say, the market for mortgages is 4%, and say, I'm going to charge 5%, you get nothing. You probably get adverse selection. You could probably get the people that are rejected by other banks come to you, so you probably are getting the worst clients. But if you really want to be competitive in a market, you have to price it in line with the others. So the idea is, or my idea or my suggestion would be, for the smaller markets, you have to open to competition so other lenders come in. Number two, you have to make them understand the risk so that they don't price for uncertainty, because uncertainty is always making the price higher. And finally, I think that the revolution we're living in terms of technology and data and all that is making those things possible. For the banks, regulation are very important. What we see as the successful formula that we've seen in many countries, we operate in more than 40 countries. Not as many as CITIBANK, which operates in more than 100. But what we see is it's not so much about making a lot of rules, but about implementing them. We found that having regulators inside the banks is a much better practice than issuing a lot of rules. You can issue many rules, but if they're not applied, they're worthless. You can issue less rules, but if you are inside the banks and checking how they're applying the rules, that is much more effective way of controlling the banking system, and also a way of reducing the prices that they charge, because you can see it from the inside the practices that they're running.
Thank you. I should add that even the cost of opening and maintaining an account is relatively high in Latin America, which is really where these new products, such as increasing the point of sales and mobile money agents as a cash in, cash out point, have tremendous potential in bringing down costs in the region.
I also should say there's also, with the insurance question, there's also a group called the Microinsurance Center, and if you look up, you can Google it up, or I can't remember the site, or if you look at CGAP, CGAP.org, you'll find it through there, and there's a lot of details on programs around the world in many different size countries that I think would be relevant to different size countries here, that talk about pilots that are sometimes done with very large insurance companies or subsidiaries or national insurance companies, but about those kind of innovative programs that go much deeper. And that, because it is challenging to create these new programs.
The formal banking system can.
Would you like to follow up on the insurance question?
I think he answered very well.
Okay. I'll also just pose to the panel in regard to the second comment on the role of technology. Again, given the relatively higher costs and relatively less competition in the banking sector in Latin America, are there any additional pieces of technology that you think have potential to drive down costs of financial services in the region?
Well, definitely mobile devices will close the gap that we have in infrastructure in some of our markets, to distribute programs, to make payments, to accept cards. Actually, we are looking at a very rapid expansion in Latin America of mobile acceptance, where a smartphone can become a POS terminal just with the addition of a device. and that is also expanding the acceptance in areas where maybe fixed lines are not available for the small merchants. But also we are looking at some other implementations where even a very, very small merchant with a very, very basic phone can start accepting payments and receive via SMS the confirmation that the account has been deposited by the payment of the cardholder. So definitely we will see more and more on mobile payments and mobile acceptance.
I also think that the data analysis is a revolution. We're just seeing the tip of the iceberg, and we banks, for example, don't even know our clients, don't even are able to analyze the data properly. I mean, Visa probably is one of the examples where they do a better job, but here at banks and maybe insurance companies also do a better job. But I think banks, we don't do a better job. Retailers, for example, are way more advanced than we do. And it doesn't matter if the country is very big or very small. I think the data analysis is going to be a revolution in terms of how you price things and how you do it. I'll give you 2 examples of retailers that you probably will know that made us think in the bank we need to catch up with this. You know, CVS, which you all know is a pharmacy here around the United States. They calculate the size of the shelf depending on the store. They know, they make a sample of the race and the people that are around the area. They know if they're tall or they're small, if they are Asian or they're Hispanics or they're whatever, and they measure that and they put the shelf at the eye level, at the right height, because that is the shelf that you sell more goods. They have enormous amount of data on the population that buys in the stores, and they use that data, to price the products perfectly better, etc. In terms of financial institution, we are miles behind that. We don't understand our clients' needs. We should understand the data and the analysis of that on how to react better. Walmart had, not Walmart, it was Target, had a great example, had a great anecdote, which was they were sending Pampers and advertising to a 17-year-old, and the father complained and say, why are you sending Pampers to my 17-year-old if she's not pregnant? And the Target marketing department said, we're sorry, but according to our data, if your daughter bought this product, which is vitamins of this kind and this other product and this other product, the chances are that she is pregnant. Well, she's not. Then he went home and asked her daughter, is like, well, do you need to tell me something? And she said, Dad, yes, I'm pregnant. So the guy was like, how come Target knows more about my daughter than I do? So the anecdote is like, oh my God, first of all, it's like, oh my God, they know more about our lives than we do. But it gives you the idea of the power of data and analysis. Can be incredibly beneficial. It can be also badly used and can be abused, and that's why we need regulators to take care of that. But it can be also used in a very beneficial way. Google had another example. I'm sorry, which is the national health system in the U.S. was telling doctors where the flu was expanding, and Google published a research paper in which they were able to tell it 1 month ahead of the national service. And it's like, how come Google knows it better than the national service, which talked to the doctors and all that? All Google was doing is seeing where people were putting in their search engine flu symptoms. When people put flu symptoms in the Chicago area, Google thought flu is in Chicago already. 1 month later, the National Health Service said the flu is in Chicago. Google said, well, we already knew it. So these examples tells you that there's a revolution going on in data. It doesn't matter if the country is big or small, etc. It doesn't matter where you are. if you analyze the data correctly, it can help a lot decisions. In financial institutions, in insurance, in mediums of payments, it can be more efficient, we can reduce the prices, we can attract much more population into the system. And this is just starting right now. The data analysis that used to be very expensive in the past is becoming cheaper, data storage is cheaper, etc. I think that is a revolution that it's going on right now.
Thank you. Any other questions from the floor? Yes, in the back.
Lucia Diaz-Martin with Pro Mujer. The topic of mobile banking just came up, and mobile banking has been slower to take off in Latin America because of difficulties with integration with the existing telecommunications structure. So what do you foresee in the near future for mobile banking in Latin America, and specifically how do you see this area opening up to non-bank financial institutions that might have fewer IT resources?
Please.
Before I go. I would just say that I think it's happening, and it's happening more quickly. I think in many countries, mobile banking is a quandary because mobile is managed by or supervised by one ministry and banking by another. And those two ministries have the least in common probably of any ministries. So how often the central bankers talk to the Ministry of Communication or whoever is governing over the two. And then the reality was payments, there are gaps in there. Very often there are regulations, but as soon as you say the word deposit, the central bank says this is mine, right? It's obviously, we had lots of old banking acts everywhere that cover anything that has to do with a deposit, but when it has to do with a payment, or I'm actually just sending, what am I really doing mobile point to point? I'm actually just sending information that there's, I put money here and you can collect it there. Is that the same thing? Well, it's been a quandary, and it's caused in many countries to have that dialogue. And there are countries that we work with that are very small and some very large where we use the mobile payments platform heavily. As I was saying, in Kenya, of course, it's an enormous platform. It's just pushed the banks out of the way, the M-Pesa banking platform. In countries like Mexico, we're using it extensively. But in countries, smaller countries too, they're saying we can't afford duplication. So the mobile platform itself provides this amazing mechanism for outreach. It's very inclusive by its nature. But whether the mobile operator is the bank entity, are they the one who is actually taking a deposit, making a loan, and the concept we have about banking, or are they really the communication mechanism? If you're using an ATM and sometimes in a drugstore here in New York or elsewhere, that may be owned by a private network, but the money, it's linked to the banks. It's linked through the card issuers. It's linked in that sense through an agent. It's an agent, and effectively one has to really debate: are your mobile operators a tool for your financial sector, another way of outreach like internet, or are they going to become licensed financial institutions as well? And both models exist by different governments. So I think it's a discussion on a country level that one has to have.
And a very important conversation going forward.
And I would like to add there that smartphones are right now about 25 to 30% of the mobile phones in Latin America. That number will go to maybe 50, 60% in the next 2 or 3 years. Once you have a data program in your hands, then it becomes very easy to start doing more things in your phone. Even if it is just to check your balance, also to make a payment, because then you are independent from what the mobile operator wants you to do with specific applications in the SIM. So this really will also change the way we interact with the network and with the e-commerce.
I guess some trivia. What country in LAC has the highest mobile banking penetration? You want to yell out an answer?
Per capita or?
Per capita. No. Haiti. Which, in part because after the earthquake, they brought in, they began making social payments versus via mobile phones, which really highlights the potential for mobile banking, particularly in countries with weak physical infrastructures and the huge potential to reach people who don't have access to traditional banking channels. So let's conclude with the question that ultimately what we all want is commercially viable products to expand financial inclusion without the use of government subsidies. And so if any of you, without revealing any proprietary corporate secrets, just the commercial model for products with $3 monthly premiums or payment cards, which are simply withdrawal fees. Is it cross-selling? Is it volume? What is the corporate strategy to make these products commercially viable?
Well, at least, as you mentioned, that has to have a minimum volume, and because I'm insurance, I deal with risks. We need to understand the risks we are talking about. So we have to figure out ways with external data sources to be able to analyze the exposure. So if you wanted to include a product that it covers, say, earthquake in Colombia, which is an earthquake zone, we need to cross that information with the outreach of the partner you're working to see the territory they're based, what is the likelihood of an earthquake to happen. So actually, when you do your pricing, my point is your pricing has to be adapted to that specific segment. So in other words, we cannot consider our existing models, as you mentioned, to try to build a microinsurance proposal, because first of all, it won't work, and you really have to understand the whole chain, from the education, from the binding of and receiving the money, through actually the claims payments. Because if you have a program that has too much frequency of claim, it won't be able to survive, because many of this population does not have access even to a card. So most time you're going to have to send a motorcycle with some cash. So all those things you need to read. In other words, you need to understand what the program you're in, and build it up in a way that is affordable and meaningful for that population. So you have really to specialize on what you're doing.
And then I'll ask you to forgive me, because I have to race. I'm keeping your husband's Swiss time at 3:30. I have to be out. I just wanted to say, I think scale, it helps, obviously, right? In countries where you can achieve scale, even your inefficiencies get divided up a lot more and spread more. And I would almost say that's what's happened in countries like this, in financial services and things in the past. It's taken technology to get beyond that, to really reduce those inefficiencies. And I think in most countries and markets, regardless of the size, we can't afford duplication. So nobody wants to pay for it. So if you're going to try to put ATMs everywhere that don't exist today, but you have points of sale at shopkeepers, it doesn't make sense. You better use those points of sale as an ATM as much as you do for shopping. If you have a mobile platform, that makes sense. It gives you a physical or virtual network that reaches into the most rural areas in terms of communication, but also in terms of financial access and services. And I think whether you're a very large institution or a small one, you're trying to put these as much as you can onto platforms that are already built, that are well supported, and that are low cost per transaction. Because either you're going to have very high volume of very low cost transaction, or you're going to have a low volume and charge people a lot. And that's just not the outcome as policymakers or as consumers that people want to find themselves. So I think many countries are going to have to be much more creative about how they link what were traditionally very different operations, financial services, retail, mobile, things like that, in order to integrate them. Will you forgive me?
Thank you. Well,
excuse me, everyone.
Please join me in thanking the panel.
Thank you. You continue. It's just me.
Please run.
Excuse me.
For sharing innovative uses of harnessing technology to deliver financial services to the poor. And thank you.